traders all around the world. This is FXPassion broadcasting you live on YouTube, and this is Forex Trading Course 101. Remember, we are in the professional module, and today we are going to end this professional module. Right, we are in the hedging part 5. If this is your first time, everybody, please go back on the Stohastic YouTube webinar page. Find Forex Trading Course 101 and start to watch the webinar starting from the basic module about market structure, highs and lows and trends. Remember the three pillars. We are trying to understand and to build a strategy and or a system that has an edge. We are trying to understand risk management. Hello Miguel, how are you? And the big one, the psychology part, right? Yesterday I was talking to some students, everybody, and I'm going to tell you again, right? If you know everything and anything about the strategy and or a system, if you understand how risk management works, if you know everything about the modules, market structure, highs and lows, support, resistance, Fibonacci, crowns, at the level that you can give classes and you are not making any money, everybody, there is only one place to go, and it's the psychology part. Hello, time to shine, how are you? The psychology part, everybody, is the last piece of the puzzle, right? And you don't want to do this, you know, oh, I'm not crazy, I am intelligent. This has nothing to do, everybody. But psychology is the last piece of the puzzle. And remember also that 90% of traders lose money in the Forex market worldwide. Why is that? Well, this is the missing piece, the psychology part. And there is disclaimer, the webinars are not investment or trading advice. The webinars are for educational purposes only. Don't trade with money you cannot afford to lose. And for homeworks and or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact. That being said, everybody, let's open the pictures. And before we check the live market, let's go back again, right? Just to refresh our minds. Number one, a hedge is for protection and not for profit. Number two, hedging is not suitable for all traders. Why is that? Hedging is considered and classified as a high risk strategy. What is the reality? The reality is hedging is very safe but also very misunderstood. A hedge is a trade. We've done this, we showed you how this works, and if not done properly is going to break, is going to burn your account. Number 5, the hedge is going to increase your risk, so you need to pay attention. This was an example for 3 weeks ago, how to burn your account, everybody, right? It's so easy, now it's so nice, it tastes so good, right, to make profits with a hedge trade, but in the end, if we are hedging in the wrong direction, we need to accept our losses. And one more. So this is the two more rules. Rule number 1, you cannot put a hedge everywhere, everybody, and we are going to talk about this today. You need to have a technical reason that explains the hedge. Rule, when you are wrong with the original trade and with the hedge, you must close the trade with the loss. And the last but not least, you don't want the hedge to be triggered, and hedge is for protection and not profit. Okay, so today is hedging part 5, everybody, and we are going to talk where not to put a hedge, okay? And I have already some students that are not listening, of course, you know, breaking the rules, okay? The most dangerous environment, dangerous environment, the most dangerous environment, everybody, for the hedge is the what? It's the so-called sideways movement, everybody. Okay, so this is the dangerous environment. Okay, so don't hedge when you have the sideways movement. Why not? Because, and one more thing, right? This is not, it's just a suggestion, okay? Suggestion. Don't hedge on 4 hours and below. Okay? If you are not skilled enough, everybody, if you are, hello Annie, how are you? If you are a beginner trader, don't hedge on a 4-hour time frame, everybody, and below. Why is that? Because simply you could be looking at the, let's say that the daily chart is the blue one, right? And the yellow one is the 4-hour chart, 1-hour chart, whatever. Okay? And we said, well, I'm going to hedge, right? And you put your hedge down here. Oh, I'm going to buy, I see a crown. Everything what we have learned so far. I'm seeing a crown, right? And I have the first Fibonacci, something like this. Okay? Now, don't hedge on the 4-hour time frame and below, especially for the ones who are on the 1-hour time frame, 2-hour time frame. Why is that? Well, number one is because you can get, the market can hedge, you can hit your hedge very quickly. This is the first reason. The market can hit your hedge very quickly on the smaller time frames. As we said, the market can do anything it wants, right? And even if you are on the daily time frame, don't hedge the sideways movement. Why is that? Because the market many times, right? Okay, let's delete this, delete. The market many times is going to do this and then is going to go up back again. And you are going to have problems. Time to shine. Most of the time we are trading those time frames. Those, sir, I know this is why I'm telling you. But we learned the confirmation time frame. So before you enter on the 1-hour time frame, 2-hour time frame, 4-hour time frame, you need to have a confirmation from the bigger time frame. Or this is daily, or this is the monthly, the weekly. Okay? And everybody, we learned this. We learned this when we learned about the Fibonacci's. When the market stops, I'm telling you, on the 4-hour time frame, on the 2-hour time frame, everybody, when the market stops you out, I'm talking about the Fibonacci, when the market stops you out on your Fibonacci for the 3rd time, something like this, there is an 80% chance that you are in a sideways movement. So if you went long and the market stopped you out, and then you went short on the 1-hour time frame, 2-hour time frame, 4-hour time frame, and the market stopped you out again, and you went long again on the 3rd Fibonacci, and the market stopped you out again, so this would be here. This is the first time. Let's make it yellow. This is the first time, this is the 2nd time, and this would be the 3rd time. There is an 80% chance that we are in a sideways movement. You are saying don't trade the sideways movement on those time frames, but other movements are fine. No, I'm saying don't hedge the sideways movement. Time to shine. I'm not saying don't trade. I'm saying you don't hedge the sideways movement. Okay? Now, AUD, CHF, it's a great example, everybody. AUD, CHF. Let me just open here. Okay, AUD, CHF on the weekly chart. Okay, so this is a great example. Okay, so here, okay, and this was the upper band, right? So this is the weekly chart. If we go on the daily chart, everybody, if we go on the daily chart and look in here, AUD CHF daily chart, it happens all the time, everybody, right? So the sideways movement was something like this. Okay, and if you went short or long, it doesn't matter, right? If you short the market and you would put a hedge up in here, right? And if you went long, you would put a hedge somewhere here, right? And until it's one time, it's okay, but most of you, everybody, beginner traders, they are not following the rules. In the last lesson we told you, you can hedge only once. You can hedge only once, and if the market reverses, you need to open another trade for the loss, and if the market reverses again, we are done. Those are the rules. But some of you are sending me emails, oh, what should I do, what should I do, what should I do? And you opened in a sideways movement, everybody, you opened 6 trades, right? And I told you, well, close everything. Oh, but it's too much, I'm losing too much. Well, it's your problem, everybody. We told you, hedge only one time. You didn't listen, right? You expected euro dollar, just an example, you expected euro dollar to go up 3 weeks ago, right? Or to go down right now, it doesn't matter, everybody. So instead of have 3 trades maximum, 2 buys and 1 sell, or 2 long trade and 1 short, or in the opposite direction, it doesn't matter. Instead of you having 2 short trades and 1 long, you have what? You have 6 trades, right? You have 3 long trades because you thought the market would go up, and you have 3 short trades because the market took you in the hedge. Passion, help me. I'm helping you. Close everything. Don't even bother thinking and mixing around. Okay? Close everything. Oh, but I'm losing 10%. It's your fault. Look in the mirror. Write into your journal, I was stupid. I was greedy. Okay? I was fearful. In the end, this is not trading, everybody. This is you being emotional, not listening, okay? So, if this happened to you, everybody, if this is you, close everything, okay? Accept the loss, close everything, and don't hedge. Never, ever, ever again. Unless you learn this on the demo account, right? You have done this 50 times, 60 times, you are following the rules, you are not emotional, then you can go back trying to hedge on the real account. Time to shine, I mean just to hedge on the sideways movement. Yes sir, no problem. Yes, don't hedge on the sideways movement, everybody. Especially if you are a beginner trader. So if you've done this, help me, Passion, I'm helping you. Close the trades. It doesn't matter if you are losing 5%, 1%, 20%, close everything. You are not going to sell yourself, everybody. It takes enormous psychological focus and stamina to resolve this. Okay? So close everything, don't bother. Go back on the Ducascopy YouTube webinar page and start to watch the Forex Trading Course 101. Start from lesson 1. Market structure, highs and lows. Okay, another one which is difficult to hedge is AUD NZD. See everybody, especially on the smaller time frames, right? Okay, don't hedge on the 4-hour time frame, on the 1-hour time frame, right? Now let's look AUD NZD on the monthly chart. Okay, so where is the hedge? Hedge is down in here, because this is a position trade, everybody. But what do? Let's take this piece of information here, okay, and let's go on the 4-hour chart. I'm not sure if I'm going to find it, so okay, there you go. 4-hour chart, everybody, and I'm going to go on the 8-hour chart. 8-hour chart, there you go. Let's move on the 8-hour chart. Okay, of course we don't know the future, right? Now looking here, everybody, how many times the market could take you in a hedge, right? Of course we don't have, when this happened, we don't have the crystal ball, but right? Just give me an example, just give me a second, everybody. So here is one. You have this crown, right? And you would hedge here, and then the market would take you in and went to the upper side, right? Now you have, on the short side, you have this crown here. You would short the market, right? And you would put your hedge up in here. The market would take you in. You would have problems, right? So this is the reason, and I'm on the 8-hour chart, everybody. If you are on the smaller time frame, 2-hour chart or 4-hour chart, you are going to have problems with hedging, right? Why is that? Again, those are the basics, right? If this is the market structure, or if this is a down Fibonacci, doesn't matter. The market can do this, right, before it goes down, right? It can do this again before it goes down, and then it shoots up and does this again, right? This is how the market works. And if you are not skilled enough, everybody, and if you are going to hedge the sideways movement, you are going to have problems. Why is that? Because the market can reverse quickly on the smaller time frames, especially on the 1-hour time frame, 2-hour time frame. Okay, if you are not skilled enough, everybody, where in reality you should hedge only up in here. This would be your hedge zone from the daily chart, right? So this is the A up in here. This is the A up in here. This is the B down in here. Just an example. And again, there are different models how to hedge A, B, C. Right? So this would be the hedge. But I'm going to have problems if I hedge every time there is a sideways movement, sideways movement, sideways movement. This is the Fibonacci. And if we're talking about just plain structure, extension, retracement, and we learn this. Oh, Passion, how do I know when the extension is over? How do I know when the retracement is over? Well, you are going to see a change in the short-term trend, right? So if the red is the daily, and if you are on the 2 hours, again, you are going to have problems, right? Because it can do, the market, it can do anything it wants, when it wants, you know? When, so you are going to hedge the 2-hour time frame sideways movement, the 4-hour time frame sideways movement, the 1-hour time frame sideways movement, right? Well, the only place to hedge, talking about structure, is down here, below or above the previous confirmed extension. Why is that? We learned also this, because the market, in order to wave, it can go down until here. It must not break the structure low. It must not break a structure low. If it breaks the structure low, it's still okay, because this means that structure has reversed, right? Miguel says AUDNSD has been sideways since 2015. Yes, sir. Again, everybody, you can trade the sideways movement, no problem. Just don't hedge on the 1-hour time frame, 2-hour time frame, 4-hour time frame. Remember the picture, everybody. You cannot put a hedge everywhere and anywhere. Alright? Let's take an easy one. EuroCAD. EuroCAD, everybody, on the daily chart. EuroCAD weekly chart, everybody. Right? Easy to hedge. So extension, retracement, extension, retracement, extension, retracement. Easy to hedge, right? Hedging here, or if you're going to short, hedging here, right? Hedging here, hedging here, and now hedging here, right? And we have a new uptrend line, I believe. Yes. Okay, those was a false breakout on the EuroCAD weekly chart. Right, everybody? Now, if you are skilled enough, it's okay, but if you are not skilled enough, everybody, okay, so this was also the sideways movement here, right? If you want to hedge, everybody, the sideways movement, hedge from the daily and above, and hedge on the side of the trend. Don't go against. Okay? So the hedge here would be, we are going to go long, and if for any reason, everybody, the market goes down, then we are going to short the market, right? Now, what did I do? We hedged this market, but we closed the hedge. Okay, this is the weekly chart. I'm going to go on the daily chart. We talked about this, everybody. So I was hedging this part in here, but as soon as we saw bullish confirmation, we were out. Okay, I didn't make any money from this, everybody, but hedge is for protection. Okay, I didn't make any money in here, zero. I mean, just a few pips, but it doesn't matter. Hedge is for protection, not for making money. So the market, I was long in here, the market took me in, as soon as reversed, and this is a bullish sign from the weekly chart, I was out and I put another hedge down here, right? And then the market finally, right, shoot up and it's moving up. Okay, everybody, so lesson for today: don't hedge the sideways movement. If it happened to you that you have 4 buys, 5 sells, or 7 buys, 25 sells, just close everything. Don't even bother thinking and calculating your money management, okay? But pay attention not to get caught in the sideways movement. And follow the rules. And if you are not able to follow the rules, everybody, don't hedge. Just put a stop loss, okay? We are giving you knowledge, we are teaching you what to do. And of course you can accept and you can also reject. You say, oh, Passion, I don't like hedging. Great job, no problem. You know, you can say, oh, I don't like the Fibonacci's. Great job, no problem. Everybody, you can reject everything that you don't like and trade what you understand. I have a student trader, everybody. He uses just the original Fibonacci. He does not understand the contrarian Fibonacci. He does not understand the Fibonacci of the confirmation, and he is making money. He's making pips just with the original Fibonacci. That's okay. That's the way to do it. I'm confused, sir. Is that a general rule to not hedge on the smaller time frame, or is just when there's sideways movement? General rule. Time to shine. General rule. Okay. Time to shine. I'm going to try to explain you again. The problem, you know what is the problem? The problem is not the sideways movement. The problem is not the beginner trader obeying the rules. Okay, I have received a few emails asking for help, and all the emails had 4 buys and 6 sells, or 8 sells and 9 buys. So we are teaching you hedging, which is an advanced technique not suitable for most traders. Okay, and you are trying to apply this, and you are not following the rules, and you apply this on a 1 hour chart with $100, you are going to burn your account 50% faster because of this. So I thought, and I said, okay, for the beginner traders, it's a rule: don't hedge. I don't care Fibonacci structure, don't hedge on the 4 hour time frame, 1 hour time frame, 2 hour time frame. As long as you stick to the rules, you're okay. Yes. In theory, yes. In theory. Okay. What's the problem, everybody? The problem is this picture here. This is the problem. Okay. 100% of the students that asked for help, this is what was happening. They were making money with the hedge, and they were closing the hedge, and they were opening a new position, increasing the risk. And then they received the margin call. So they had 9 trades opened. They have 4 buys and 4 sells, or 5 buys and 6 sells, and they don't have any margin to resolve the quest from different brokers. And they ask for help. And what is the help? Close everything. Don't even bother. Close. Right? So in theory, time to shine, you are correct. As long as you stick to the rules, you're okay. But we are emotional creatures. We love the feeling of being right, which is psychology, everybody. We hope that the market is going to reverse, and we don't want to accept that we are wrong. And when we are hedging in the wrong direction, we are just telling ourselves stories. Oh, I just made 12 bucks, the market's going to reverse on the next Fibonacci retracement. And the market falls again. And you are thinking, wow, I just make 50 bucks. And no problem, because the market's going to reverse on the next Fibonacci level. Right? And I'm doing this 4 times. And for the 5th time, I cannot open any more trades because I am without margin. And I have a drawdown of what? Whatever, 10%, 50%, you know? This is where hedging is dangerous. Hedging is an advanced technique, everybody, and it's not suitable. Number 2, it's not suitable for all traders. Even some professional traders are not hedging, because hedging is considered and classified as a high risk strategy. Why is that? Because of this. You know? One more, where a student lost the account, everybody. He lost, it was a demo account, but a student lost the account on USD CHF. He lost the account hedging in here. He lost the account hedging this sideways movement in here. You know? Supposed to enter. Okay? So this is the sideways movement. Let's go on the 8-hour chart just to see if we can. Right? So this is the chart. Lost the account, everybody. Would you say today's market are very volatile at the moment and we should be patient? No, no. You should make tons of money, everybody. There is so much opportunity out there I have never seen. You should trade, everybody, not be patient. Everybody, tell me a currency pair that you are confused what is happening. The stock market is crashing, the Forex market is, what's the word? Flowering. The Forex traders, everybody, are making more money today than ever. The stock market is crashing. The investors are worried, but the Forex traders are making money. Volatility is good, it's not bad. Time to shine. Flourishing, thank you, flourishing. Thank you, time to shine. In my humble opinion, this is the time to trade, everybody. Tell me a currency pair that you are worried about, everybody. Wow, I thought because of the virus things are very volatile. Everybody listen to me, this is of course my humble opinion. The coronavirus has nothing to do with the Forex market. Okay? It has to do with the stock market, of course, because they are closing factories, they are closing establishments, they are closing imports, they are closing whatever, they are closing companies, they are closing borders, they are closing schools, you know. So, the coronavirus has an effect on the stocks. But as you can see, everybody, the Forex is volatile. You know, it's going up and down, right? Indexes are very profitable with short trades. Thank you, Miguel. I don't trade indexes, but if you say so, everybody. Remember this. This is a concept from the basic school of economy. Every time there is a crisis, there is an opportunity. Annie, I love you, Annie. SGDJPY. SGDJPY. Okay. Let's go let's go to the monthly chart first. Oh, time to shine. I'm sorry, Annie. Time to shine was before you. Euro JPY. Everybody, you should trade right now, not to be scared of everything. Okay, now I'm going to, let's exit full screen. Let's open the real chart. What do you say? Time to shine. Let's open the real chart with the Fibonacci's and everything. The Forex market, everybody, until proven different, is the most liquid market in the world, right? Euro JPY monthly chart first. This is Euro JPY. Nothing special about it. We have an up Fibonacci, we have a down contrarian. Trade what you see. Trade what you see until the market breaks the downtrend line. As you can see, time to shine. Until the market breaks the downtrend line, we are short. Okay? We are long term, of course, because we have an up Fibonacci. Long term we are going to buy, but for the time being we are short. We have bearish candlestick formation at the back of the downtrend line, and the market is falling. So if we are short on the monthly chart, we should be short on the weekly. See, everybody? What is the arrow saying? The red arrow. What is the red arrow saying in here? See, everybody? Counter trend line break. Nothing so special. We learned this. MACD is in the sell zone, right? The market reversed at the pivot point, everybody, as you can see here. So it's a short. Nothing special about this. Everybody, this is our last lesson on hedging and on the professional module, let's say, call this professional. Starting from next Friday, we are going to go back from lesson number 1. But I'm telling you, you are going to increase your profitability, everybody, and you are going to have less headaches if you are going to check the monthly and the weekly chart first. What is the concept and the rule saying? Trade in the direction of the larger time frame. And some students are lazy, everybody, and don't want to check. So if you are a lazy trader, everybody, and you have a crown here, but you are not seeing it because you are just trading the 1 hour chart with the daily chart, this is not enough. You should check the monthly chart first on Friday or on Sunday when you prepare yourself for the trading week. You should check the monthly chart first, the weekly chart second, and make a decision to trade on the daily and lower time frames. But some of you are not doing this, are you? Tell to Father Passion here, everybody. Time to confess. Who is analyzing the market on the 4 time frames? I know some of you are not doing this. How do I know? Because of the questions. As you can see, everybody, is nothing special, nothing mysterious, right? It makes sense. Monthly chart is short, weekly chart is short. Check the news events during the week. Daily chart. See, this is from the past lesson, everybody, about hedging. Rules for the second trade: we are allowed to enter just 1 hedge per currency pair. Number 2, enter only with the confirmation from the higher time frame. Original trade was on the 2-hour chart, 1 hour chart. The second trade must be from the higher time frame, the daily. Number 3, with the second trade we must earn back what we have lost with the hedge and not more. And number 4, we are done for this business. This is the lesson. I mean, this was the lesson from the previous week, 2 weeks ago. Right? Going back to the market, everybody. Going back to the market. There you go. See? Those are the rules here. This is the daily chart. So the market is short. I mean, on the monthly we are short. On the weekly we are short. Guess what we should do on the daily? Shorting the market. Right? Short in here, short in here. Right? Where does the hedge go if you want to hedge? Hedge goes up in here, above the sea. See everybody, there is a difference. You cannot hedge in here. The sideways movement, see? Oh, there you go, clone. See how as time to shine is saying you need to follow the rules. You don't want the market to hit your hedge. I'm going to erase a few things. And if you have the hedge up in here, the market has a great chance to take you in. Put your hedge above the C of the Fibonacci. Passion, has the Euro JPY not a channel now? On the daily chart, any? On the daily chart? On the daily chart, yes, Euro JPY is in a channel now, but this doesn't change anything. We should go short. Why is that? Because the higher time frame controls the smaller time frame. Or you go short right now, we have a counter trend and break, or wait for the market, to go back up in here and short the market in here. But this is a lesson about hedging, everybody. Put the hedge above the C. Okay? Okay, next I'm going to open it in here, everybody, because I don't have the, oops, not this one, I don't rate, but SGDJPY. SGDJPY. Let's wait for the software to answer. Tell me, Annie, what do you see from the monthly chart? And we need to check, everybody. We need to check within trading view if Forex is missing some data. Trading view, there you go. Just give me a second. Charts. Everybody, what do you see on the, where is the chart here? What do you see on the SGDJPY? Right? Yes. What do you see on the monthly chart? So SGDJPY. Okay, Saxo maybe. Let's wait and let's go on the monthly chart. As you can see, Annie, the chart on Forex, maybe not yours. Oh, let me see this. It's the same. It's the same. Great. Okay, so we can continue. So we have the upper band and we have the lower band. Everybody, should we go short or should we go long on the SGD-JPY? What do you think? Short, of course. Short. Market structure, extension, retracement. Where does the hedge go, everybody? From the monthly chart, of course, we don't have the trillions and the zillions of dollars, right? But just for educational purposes, where does the hedge go? Does the hedge go here, or does the hedge go up in here? This is not the Fibonacci, everybody, this is just structure. And the market is making lower lows, lower highs, right? Lower lows, lower highs. And this is the downtrend line. So nothing special about this market, right? Decorations, there you go. Short, the above, yes sir. Okay, we are not trading the monthly chart because we don't have the trillions and the zillions, but we can trade the daily, maybe the weekly. So this is the hedge. Why is that? Because the market can reverse and it must not break the extension. So this is the hedge. Passion, can we put a hedge in here? No. But it's going to make a crown, it doesn't matter. But it's going to break the downtrend line, it doesn't matter. You don't want the market to hit your hedge. The hedge is for protection. A hedge is for protection and not making money. So this is the correct place, this is the wrong place, everybody. You don't want. Okay, and this is from the monthly chart. Above the C, I don't have the Fibonacci, everybody. Okay, now let's move from the monthly to the weekly. I'm not going to draw the Fibonacci, everybody, it's going to take me too much time. Okay, so if we are short on the monthly, we should be short from the weekly, right? Counter trend line break, counter trend line break, right? So it's short, short, short. Let's open the daily chart. Let's compress the chart. What is relevant to us is this here, right? What is the structure? Extension, retracement, extension, retracement, extension, retracement. Nothing special, everybody, nothing mysterious, right? Passion, how do we know? Well, we learned this, everybody. Counter trend line break happened here. Okay, counter trend line break. Passion, are you always using a hedge? Absolutely not. I'm using a hedge when it makes sense to use a hedge, right? So I'm not using the hedge here. It doesn't make sense to me, everybody. For this trade, I'm going to use a stop loss up in here, right? But back again, Passion, how do you know it's time to sell, to go short? Well, we learned this. Short-term trend, higher highs, higher lows, higher highs, higher lows, reversed. Lower lows, lower highs. Everybody, we learned this. If you don't know this, everybody, go back on Ducascopy YouTube webinar page and start to watch lesson, starting from lesson 1. What did we learn so far again from the previous modules? The crown, left tip, center tip, right tip. This was the entry, everybody. Let's wait. This was the right tip. let's make this, let's make it this. Okay, so from the daily chart, this was the entry in here. For the more aggressive traders, you have here a bearish candlestick formation at past resistance, but for the one who wants to be more secure, you could wait, or I mean you should wait for the counter trendline break. This was the entry, everybody, on SGD JPY. Crown there, yes sir. Crown there, yes sir. So as you can see, everybody, there is nothing special today. Coronavirus or not, nothing special in the Forex market. Just trade what you see, follow the rules, learn the basics, be consistent, that's it. Okay, we are going to close to end the webinar for today. See you back next Friday, and we are going to start back. We are going to start from lesson number 1. So we are going to go back on the basic module for the new traders, for the new beginner traders starting from Friday. We are going to go back on the basics. What is market structure? Okay, and if you are advanced, everybody, if you are in the intermediate module, beginner module, advanced module, it doesn't matter, go back on the Dukas Copy YouTube webinar page, Forex Course 101, and start watching the lessons again. Time to shine Annie and Miguel. Is anything special about the market today? What do you think? Is anything special? We analyzed Euro JPY and SGD JPY. Is anything special about those two charts? What would you say? Is anything special in here? Is difficult, everybody? Who in here thinks it's difficult to make some pips and money? Do you think it's difficult today to make pips and money? Nothing special, correct? Nothing special. And believe me, everybody, when the investment capital is going out of the stock market, right? I don't have the numbers, I never dove into this, but believe me, some funds are going to go into the Forex market. Some funds are going to go to the safe haven assets like gold, silver, maybe some cryptos, but some capital is going to flow into the Forex. You can bet on this. Okay? So don't despair and don't worry about the coronavirus. It's nothing special, in my opinion. Okay? Okay, everybody, have a great weekend. See you back on Friday. As I always say, stay strong and trade with passion. This is FXPassion signing off.